Corley, since the cost of living crisis took hold,
just to move the motion.
I move the motion, Corley. And since the cost of living crisis took hold, households have chased every possible avenue to cut costs. But there comes a time when there's nothing left to cut. So many households find themselves now in this position. For mortgage borrowers, the cost of living crisis has opened up a whole new front. At the end of 2021, inflation soared, driven by supply chain disruptions as pandemic restrictions were lifted across the globe, and was further turbocharged by Russia's illegal invasion of Ukraine. Since the summer of last year, the ECB has responded to inflation by hiking its interest rates. So far, its main lending rate has risen by 3%, and this is the most severe round of interest rate hikes in decades. The impact will be acute for many. It has been immediate for some, with their mortgage repayments set to rise by thousands of euros this year. A new source of anxiety is bearing down on them. Another blow, another drop in their living standards, another squeeze on their disposable income. And now is the time, in our opinion, to introduce targeted temporary mortgage interest relief to support them. There are over 700,000 outstanding mortgage accounts on primary or family homes. And we know that the interest rate hikes by the ECB are impacting mortgage borrowers differently. Retail banks have not yet passed on these rate hikes in full to their variable and fixed rate customers, but they have started with further rate hikes expected in the time ahead. For almost 200,000 borrowers on a tracker rate, the impact is significant and it is immediate. To give an example, a borrower on a tracker rate with €150,000 outstanding on their mortgage will see their monthly mortgage repayments rise by more than €2,600 this year. There is also another category of borrowers, many of whom are with the lender they didn't want to be with or chose to be with. Those are mortgage loans that were sold off to Vulture funds. There are more than 100,000 Irish families, borrowers, whose mortgages are now held by non-banks, 65,000 of which are on variable or tracker rates. Vulture funds are now hiking their rates aggressively, with many borrowers are now facing interest rates as high as 7.5%. They have no option to switch. They have no option to fix the rate. Many of these vultures offer no alternatives. I was contacted recently by a mortgage borrower, Rachel, whose mortgage was sold by Permanent TSB to Start Mortgages. She's a full-time carer for her son who has cerebral palsy. By January, she had received 4 letters from Start Mortgages, each informing her of a further rate hike. She will be paying over €4,000 in additional interest this year than she was last year. In her own words, Rachel tells me, "Hikes across the board from diesel, electricity, gas and food are barely sustainable. But to have the constant fear every month of the next increase coming and how to finance the previous month's increase is inhumane. It has become the norm now that due to this severe financial strain on us, we now have to pick and choose what therapies and hospital appointments we can afford for our son to attend." Those were Rachel's words. Another borrower who contacted me has her mortgage held by Pepper. She's a single parent. She'll be paying €2,800 more in additional interest as a result of these rate hikes. In her own words, she says, "I have no option to fix. I work part-time in order to bring my kids to school. This is causing me huge stress and anxiety, and I am in fear of further hikes." Many households now face, as the real stories of real lives that I have relayed makes clear, acute financial pressure. They have received 3, 4 and 5 letters through the door, and they face a prospect of a 6th letter next month when the ECB hikes their interest rates again in 4 weeks' time. For many families, the ability to pay their mortgage is just as crucial as the ability to pay their rent or their energy bill. The alternative to them of not doing so is arrears, increased debt and financial insecurity. So for all of these reasons, it is time to introduce timely, targeted and temporary mortgage interest relief to support those borrowers who are and will continue to struggle as a result of increased interest costs. So I call on the Government to act and on the Dáil to support our motion to reintroduce mortgage interest relief at a level of 30% of the additional interest that were charged since last June, up to a maximum benefit to an individual of €1,500.
The ECB hiked interest rates 4 times in 2022, and it's already hiked rates this year, and it's still only February. And in line with their policy of forward guidance, they've already indicated that they intend to raise rates by another 50 basis points in March. And that means a crisis for many, many mortgage holders. And Minister, you'll be aware, and I'm sure that people say it to you in your clinics, in your local shops and your local butchers, the real pressure that they face as a result of these rises. And they're the people who are now coming off the fixed rates or who had been on tracker mortgages, and they're seeing really sharp increases in their payments, and they simply don't have that additional money to spend. They don't know where they're going to get that additional money. And obviously these hikes won't be applied universally across the board, and there will be different rates depending on whether the person is on a variable tracker or a fixed rate, and it'll also depend on who their lender is. But we do know that many people are having this impact on them at this very moment in time. So, for instance, we know that the average tracker has increased over the last 9 months from just over 1% to 4.1%. For someone whose mortgage may have been sold to a Vulture fund, they could have rates of more than 7%. And we know that this is really impacting them in terms of thousands extra that they'll be required for their mortgage repayment. And that's why we're bringing forward this particular motion, Minister. And it's a timely, targeted and time-bound relief measure for all those people that are really struggling at this very moment in time. And we do believe that this can be done, and that it can be done on an affordable basis. And that it will help those people who are struggling at this very moment in time. And it does only apply to the principal primary residents. So we're not talking about providing relief to landlords or people with second and third homes. This is very much on those people who are struggling to afford to get by at this very moment in time. And we would be based on an interest reference rate applied to the mortgage loan in June 2022. So the relief would be based on the difference in the interest payments between the reference rate of 2022 and the higher interest rate per month in 2023. So that means that those people, it means that our butchers, our shopkeepers, the people in our communities who are really struggling at this very moment in time to pay that mortgage, who are already struggling to pay the bills, get some kind of relief. And we need to be clear that we're listening to the struggles that they're facing.
Thank you, Minister. And I want to support Deputy Doherty and Maureen on this motion. Like, as we said, this is a targeted motion to help people now at a time when the cost of living crisis is so overwhelming for ordinary families. And what this is trying to do is, we know that the government can't solve everyone's crisis and can't solve the cost of living crisis. But as a government minister, you can make a difference to ordinary families who need support at this time. And that is what this is doing. What we're bringing forward here is a solution to the government to say, here, this is something we can do. And I think it's recognised right across the House, the pressure that ordinary families are under, the struggle that they have to pay their bills. And I know, I listened to the Taoiseach earlier today when he was talking to our party president, Mary Lou McDonald, and he was making the point about the reason that this is happening is to control inflation. But the problem is, all the bills have gone up, gas prices, electricity, food, everything has gone up. And then on the other side, if your interest rates have gone up, which they have, especially for trackers, for those on variable rates, but there are people who are on fixed rates that are coming to an end in the next few months or this year, and they're terrified because they don't know where they're going to get the money to make up the difference to pay their mortgages. So what we're saying, this is a short-term, targeted measure to help those people. Because a lot of people out there now are looking at us today, and they're looking at you, Minister. They're looking at the government for help because they feel they're trapped in the middle. They're working every hour God sends, they're tightening their belt as much as they can, and they're still struggling to pay their bills and to look after their families. So, Minister, what we're saying here, this is a solution that Sinn Féin are putting forward that will go some way to ease the pressure on families who are struggling and who need support at this time. And, Minister, I would ask you to engage with it positively and constructively, and hopefully we can work together, because people are looking for leadership, people are looking for help, And we think this goes some way to helping them.
In the midst of a cost of living crisis where ordinary workers and families are struggling to get by, mortgage holders are seeing a large increase in their interest costs as a result of interest rate hikes by the ECB. The hike we saw last week was the 5th hike we saw since July, meaning borrowers will be paying thousands of euro more in interest this year, and others likely to see their interest rates increase in the current period. Tá dína faoi brú do chreite agus tá sin níos fécant custody a gairí níos mó. What Sinn Féin is proposing here today is affordable, it is sensible, and it is necessary. It is absolutely necessary. This is the right time to introduce timely, targeted and temporary mortgage interest relief. And Minister, you will be well familiar with the struggles that people face and the challenges that people are under. You know, we all across this House talk to families on a weekly basis, and there's very few families that are in a position, and you know all about budgeting from your own role, there's very few families that can afford to or can comprehend how you budget for an increased cost of up on €2,000. That is a huge hole in a family's finances, and that causes massive decisions that have to be made, and potentially bills that go unpaid, or treatments or different things that are missed out because of these huge extra costs. And it could be close on €3,000 for some. This affects a very large amount of people, almost 200,000 on trackers, 129,000 on the standard variable rates, and 113,000 mortgage accounts with non-banks and vulture funds, particularly vulnerable to some of these situations. So, Minister, you yourself in the past have taken a great interest in the whole area of mortgage interest relief. In 2015, you described it as a very important support for families, and that the process of withdrawing it from existing homeowners at the same time that they're subject to a residential property tax highlights a government that is pursuing policies that are making home ownership increasingly unaffordable for families. So, Minister, at that stage, in a different context undoubtedly, but perhaps in some respects this current context is more severe than it was at that point, you believe that mortgage interest relief was necessary. I think in this targeted way it is absolutely necessary now, and I would urge you to listen to people in our constituency and elsewhere who urgently need this help and not to delay with it.
Minister, first of all, I want to compliment Pearse Doherty on bringing forward this motion tonight in regard to mortgage interest relief scheme for homeowners across the country who are under huge pressure. I meet them in my own constituency. We all meet them regularly. I spoke to a woman only last week who told me that in the last 2.5 years that her mortgage has gone up by almost €180 a month, and that it is very, very difficult. Particularly, she's also dealing with increased childcare costs and other costs as well. And you know, this cost of living crisis that we all talk about, you know, is a very real reality for an awful lot of people out there. And what we're proposing here is a temporary measure which is targeted for the primary home, for the family home, and it's also, of course, limited, because we're limited to a maximum of €1,500 per year. So those who are in very high mortgages, or perhaps with very high incomes, because they would have had a high income to get that mortgage in the first place, will be limited as to the amount that it will cost the state as well. And of course the cost to the state is something that seems to be one of the primary objectives of this government, to ensuring that they can maintain that the taxpayer isn't put out of pocket. But in this particular case, you know, the taxpayer can afford this. It's very clear that in the upcoming year we're expecting the estimates that there will be a €6.2 billion surplus. So I think, you know, we clearly can afford to provide this measure to ensure that people can afford to continue to pay their mortgages, afford to continue to pay in their homes, and not get into a further crisis as it continues to happen into the future. The cost, in reality, according to the Parliamentary Budgets Office and our own estimates, is something where between 312 and 371 million per annum, which I think, in the scheme of things and the size of the budget surplus that we're looking at this year, is something that the government can afford, and certainly can afford to target that for those who are in most of need of it. Because very, very many people across the length and breadth of the country are struggling so much to try and pay their mortgage, to try and make ends meet. And I think, Minister, you have an obligation to ensure that you provide for those people and ensure that you support this particular piece of legislation. I know the Taoiseach was relatively positive toward it today, and hopefully that will continue into your agenda to make sure this bill goes through. Thank you.
Louise O'Reilly. I get Lascount Corla, and I want to commend my colleague Dr. Pearse Doherty for his work on this and for bringing forward this motion this evening so we can have this important debate. 5 hikes in the last 7 months and another one on the way. It's more than a lot of families are able to take. Now, Minister, under pressure from ourselves here in Sinn Féin, your government did move to provide a modicum of relief for renters, and that is an acknowledgement that in order to be able to fund the cost of the roof over your head, while all of the other pressures are coming on you, that the government needed to intervene. You maybe didn't go as far as we would have liked, but you did intervene and you recognised the importance of that. And that's why there really needs to be this time-bound, this targeted measure for those who are struggling under the weight of repeated interest rate hikes, while the cost of everything else is going up. I had a family in my advice clinic, not last week, the week before, and they were paying, they weren't here, they didn't come to talk to me about mortgage interest relief, but in a funny way it was about that. So they were paying for private therapies for their disabled son. Therapies that he should, by right, have provided for him by the state, but of course he doesn't. They are on multiple waiting lists, and they saw the need to pay privately for the services that their little boy should be getting. Now they can no longer afford that, so they made an appointment to see me to talk about therapies, but they have to cut back. They cannot sustain repeated increases in just the simple cost of keeping a roof over their head. You said it yourself, Minister, that you described mortgage interest relief as a very important support for families. It is, but these families have cut back now on everything. They didn't need the advice from your colleague, Sean Fleming, to shop around. They were already doing that. They have cut back on everything, and they now find themselves, while all of their other bills are going up, having to juggle and to make those really hard choices about whether or not they can continue to fund private therapies for their kids and also pay their mortgage. Nobody wants to get into debt or into arrears with their mortgage. We all know what can happen to families when that happens, but the stress that that brings. Now is the time, Minister, for you to intervene to support these families. This is a targeted, temporary measure that families desperately need.
Firstly, I want to commend my colleague Deputy Pearse Doherty for bringing forward this motion. In the last number of months, Minister, each and every one of my constituency offices, whether it's Mullingar, Athlone or Longford, has seen a dramatic increase in people coming in with those dreaded letters from their mortgage providers, announcing another increase, announcing another drain on that family's resources that they simply don't have the capacity to meet. Now, many of these people are those who got into difficulty after the last financial crash, when the most that they had experienced of the Celtic Tiger themselves was reading about it in the newspaper as it affected somebody else. And they saw their mortgages sold to Vulture funds. Those same Vulture funds can now charge over 7% interest on a mortgage that they bought for buttons. And the options available to this cohort of people are extremely limited. They cannot move to a fixed rate. They cannot move providers. Those doors are firmly closed. So too was relying on the central bank to take action, as they effectively wash their hands of any responsibility. Now, these are families who have met their repayments. They've met their repayments on time, but these continuing rises in interest rates is having such a disproportionate impact on them, and their ability to keep doing so is genuinely in question at this point. They are going to fall into arrears without assistance. These are families who have seen their transport costs increase, light and heat increase, food costs increase, and they need assistance, Minister, and they need it at this time. Now, regulatory officials may not have the power to intervene in the commercial decisions of setting interest rates, but government does have that capacity and government does have the power to do so. And Minister, today is the day to make that decision to do so, to actually make a commitment to these families, to these hard-pressed mortgage payers, that you do hear the plight of what it is that they are experiencing and that you are willing to go some way to relieving that additional cost they face every month. Multiple interest rate hikes over the last few months, and we know that there is more to come. These sharp and significant rises in interest costs And now is the right time, Minister, to do this. I think you understand that yourself. I think the Taoiseach understands that he made reference to a potential move in the upcoming budget, but in reality that is just simply too far away. It needs to be done now. It needs to be done in a very targeted method, and it needs to be a temporary mortgage interest relief to see people of this, to provide that relief on the portion above what their interest would have been in 2022 and limited to the principal private home.
Look, I accept that the Minister states that he is accepting that there are people who are under extreme pressure because of the 5 interest rate raises by the ECB in the last period. And we all know of particular individuals who are under significant pressure. We know those on tracker mortgages that may have an added monthly bill of 200 quid. And this could be 200 quid on top of the fact of the huge increase in relation to fuel costs, electricity costs. Look, other people have spoken about the fact of all those services that you may need for your children. We could be talking about disability services that they have to actually go out and pay for at this point in time because the services aren't there. So look, that's the world in which we are operating. And look, the Minister has spoken about the fact that the central bank is on the ball in relation to the fact of the necessity of regulation and protections. And I think that's on the basis that we can't just rely on vendors. I think that's absolutely fair to say. So look, we're talking about a considerable amount of people. We're talking also that this state, and we may disagree in relation to what actions were taken or what proposals were accepted, we know, but the government did make a determination that the cost of living crisis was hurting and that there would be no cliff edge. Right, the Minister isn't in support of our motion on today. I think that's wrong. I think it's a mistake. But beyond that, I would like to think that there will be a further look in relation to probably a whole suite of issues that people will need help with. And what we are talking about, we are talking timely. That means it has to happen fairly quickly. We are talking about temporary, and we are talking about targeted mortgage interest relief. And yeah, it is a form of relief that was provided in this state previously and has been supported. But we see the issues that we're dealing with. Look, we know the numbers we're talking about. What is it? 186,000 tracker mortgages, 129,000 standard variable rate accounts, 137 mortgage accounts with non-banks and Vulture funds. Right, look, and we've all had those people come into our offices. We all know the particular issues that they are under a greater level of difficulty at this point in time, and really now is the time that we can provide them with some chance to get through this opportunity. That's what the supports have been about in the last while. It is to facilitate people so we don't have an absolute recessionary disaster.
Minister, in the midst of a cost of living crisis that has seen such a dramatic rise in the cost of consumers for utilities such as gas and electricity, is going to be a bitter blow for mortgage holders when interest rates rise again. We have a housing crisis where people are struggling to get on the property ladder, but for those who own their homes, the mortgage repayments, already difficult to meet, will become that much harder to maintain. Owning your own home takes plenty of sacrifice and hard work. For those who have worked extremely hard and saved and sacrificed to own their own home, they're often left with very little disposable income. The remainder has already been eaten into by price rises, and these interest rate increases for many will leave next to nothing in their pot for those moments and experiences that mark the differences between existing and living. In Limerick, the average cost of a 3-bedroom semi-detached home is almost €300,000, and these rate increases will mean that the repayments on this will just be that little bit harder every single month. The interest hikes expected in March will see them rise from 3% to 3.5%, a significant rise that will be felt in the pockets of homeowners. The departure of Ulster Bank and KBC has forced hundreds of thousands of customers to switch their bank accounts. These departures have also led to a less competitive mortgage market. Depending on what lending institution you're with, the interest rate hike will be applied differently. People are already paying over the odds for their home. The average tracker rate has increased from 1.15% in June 2022 to 4.15%. To put that increase in monetary terms for a mortgage player, it equates an increase of €220 per month on an outstanding balance of €150,000 with 20 years left on mortgage. This is not an insignificant amount. There are, of course, borrowers whose mortgages are in the hands of Vulture funds. They have no option to fix or switch their interest rates, have risen to over 7%. Coupled with the dramatic cost of living increases, the squeezed middle will get squeezed just that bit more. The combined effects of utility price increases, food increases and mortgage interest rates increases are really impacting the citizens of the state. Something must be done to alleviate their hardship. To that end, we need a targeted and temporary intervention offering mortgage interest relief. What we're proposing is sensible and what we're proposing is fair. We're proposing to provide relief on a proportion of the mortgage holders' increased interest costs relative to the rate in June 2022. Importantly, we believe that this should be a temporary measure and a response to the current cost of living challenges. It should be targeted, it should be for the primary dwelling only.
Dr. Rose, speak as fast as my colleague. Minister, you know the government can't stand by, and I was listening to you from my office in terms of the interactions you're having with the banks and all of that in the central bank and what's been done. So the government cannot stand by as people are being hit by increase after increase in the midst of a cost of living crisis. And you see what, you'll have got the emails as well, but you see how this is impacting people who are just coming out of the other financial crisis that have been severely hit, and that were hit that time with banks having to close down businesses and going through all this, and the trauma of them having to absorb these interest rates again at a time when everything else is hugely increased, is impossible for them to bear. They're told that the only solution is higher mortgage payments when they're already undergoing such costs, and they just cannot make sense of that the cure to the higher energy prices, higher food prices, they're told is an increase to mortgage costs. The government has a responsibility to protect its citizens, that's the bottom line, and the only way that they can do that is in the necessary time frame is to introduce this mortgage relief. It needs to be targeted, as we said, to those who really need it, and it needs to be time limited. It must apply only to people's homes and not to second homes, holiday homes or rental properties, and it should be capped at €1,500. This is a very sensible and necessary measure. Fianna Fáil indeed supported mortgage relief when they were in opposition, so it shouldn't be a problem now. The government must put aside the party politics and work with Sinn Féin to bring in these supports. Now, Minister, you will have received as well one of the emails that was sent to me and to other TDs from the married father of four whose mortgage was increased from €715 6 months ago, and it's now over €3,000, 450%. He was on an interest only. We have all of these things that we need to deal with.
Thanks, Asking Corley. Minister, mortgage holders across the country are really struggling at the moment, and in Laois Offaly I know that I'm getting representations and complaints from householders, particularly over the last couple of months. There's been a significant problem here in relation to the cost that's coming on top of cost of living. Some have been hit with interest rates increases of 3% plus, meaning an extra €400 per month on their mortgage. Last week's hike was the fifth increase since July. And that means that borrowers will be paying thousands of euros more in interest this year. We're in the middle of a cost of living crisis, sharp increases in energy, transport, food, and you could go on across a whole range of items. What Sinn Féin are calling for here is the introduction of a targeted and temporary mortgage interest relief scheme. We've had mortgage interest relief in the past, and you, Minister McGrath, while in opposition in 2015, described mortgage relief as, and I quote, a very important support for families. I agree, Sinn Féin agree with you. What we're calling for here now is a mortgage interest relief scheme that provides the equivalent of 30% of the increased interest costs relative to June 2022. What it is a temporary measure. It's targeted to provide relief for those who are most in need. It's capped at 1,500 and will not apply to second home, holiday homes or rental properties held by landlords. So it'll fund the most beneficial. It'll be most beneficial for those workers and families who need the support most. And that's very important. Sinn Féin has developed these proposals and have consulted with the Parliamentary Budget Office, and based on the analysis that we've come up with, it would cost between 312 and 371. Now, I heard your million. So I heard you saying there are about 600 million. That would be if everybody had gone on sky-high mortgage interest rates with vulture funds, etc. But of course it depends on the ECB rates. That's what governance is. This measure is sensible, it's affordable, and it can be funded by a portion of the state's projected surplus of 6.2 billion in 2023, which hasn't all been committed to expenditure. Families need real support. They don't need empty words. We have a financial surplus. The money is there. Ordinary people, and particularly hard-working mortgage holders, need this during this difficult time. And I'm calling on Fine Gael, the Greens and Fianna Fáil to back this proposal. And Minister, I heard you appealing today to the lenders, you know, to be responsible and to be fair. They're not listening. You know, some of them are charging 7%, you know, and I would ask yourself and Minister Carol McNeill to take this on board. You know, we can appeal to them. They don't listen. They do what they're going to do, extract the maximum amount of money. And your reference to 7% yourself, and that's proof that they're not listening. So we have the power to bring in these measures, and I would advocate that you do so.
Thank you, and can I thank all the contributors who contributed in this debate tonight, because I think it is a really important debate. It's an important debate because so many people out there are struggling because of high interest rates that we've seen have now increased for some of the borrowers on 5 occasions since June of last year. I have described some of the arguments put forward by government as stupid arguments, and the reason I have described them as that is because they have just tried to suggest that every single mortgage holder in the state will get €1,500, when the motion is very clear, unless the Minister hasn't read the motion. It's about the increased interest rate since June of last year. So it's not a case that everybody gets 1,500. It's nonsense. I've also made it clear in terms of my contribution earlier on that we work with the Parliamentary Budget Office, and I'm sure the ministers opposite will recognise the independence and indeed the professionalism in relation to that office, where they have costed this proposal for us. And they have done that on the basis of what assumed interest rates could happen, the rises, the increases that could happen over the next period, and the rises that have already happened in relation to that. And I can touch on that back later on. But there's a very clear motivation here, which isn't about the interest of the fact that people spoke in public on primetime, for example, last week and talked about them being mortgage prisoners, talked about how they are now paying 7.5%. The objective here isn't about reaching out or trying to support those individuals. The objective from government is somehow to suggest that this is going to cost, what, €600–700 million and so on and so forth, or that they do not understand the actual proposal that is being put forward, despite my earlier contribution, which talked about increased interest rates. So it's about trying to minimise, trying to downplay, trying to brush off, instead of actually recognising that there are people probably hanging on, listening to this debate and hoping against hope that the government will actually see sense in relation to introducing a proposal of this here. The Minister also said that this will push up house prices, from a Minister who actually believes that the Help to Buy won't. But anyway, let's be clear here. Because this doesn't increase the purchasing power of the individual, it won't have that effect. And that's why it is tailored. It isn't like the old mortgage interest relief that Fine Gael introduced, which was on all the interest that you paid on your mortgage, with no caps there. And that's why the most wealthiest actually got that. And because it wasn't time limited, it did increase your purchasing power, because you were able to factor in the fact that some of this would be paid, or some of the interest would be paid by the state. This is about the increased interest rate. It's in the motion. It is spelled out in black and white. It is the increased interest rate that has happened since June of last year. And therefore, your argument again falls in relation to that. And that's why I really, really beg on government. And we've had different signals here, because if you did listen to your leader this morning, he's actually open to the idea, because he recognises the ECB is going to increase interest rates again next month in 4 weeks' time. There's 118,000 people who have family mortgages with Vulture funds. Your party leader gave them assurances that they would be no worse off. Complete and utter balderdash. They're so far worse off. Your Minister for Public Expenditure, then Minister for Finance, said, "Sure, I would have no problem if my loan was bought by a Vulture fund." Let me make it clear and spell it out in very clear terms. Most of these loans that were sold to the Vulture funds, the biggest tranche were sold by Permanent TSB to Vulture funds. If those loans were still with permanent TSB, they would be paying less than 4%. That's the highest standard variable rate with permanent TSB. They're paying 7.5% in some cases with Pepper now. That means they're paying more than €400 per month, and that is close to, what, €5,000 per year. And you know what's going to happen next month? They're going to get another letter in because the ECB in the March meeting is going to increase interest rates by another ½ percentage point. A sixth letter landing in the door, showing again that these people are paying close to now 8% of interest rate. Thousands of euros worse off than what they would have been if they were with permanent TSB. The commitments given by your government in the past, and particularly by your political parties, have clearly been void. The people here see very clearly that they are so worse off. And not only that, we have a situation, Cancorlia, where people have come to me who are victims of the tracker mortgage scandal. And because they were victims of the tracker mortgage scandal, where permanent TSB took money from them that they were entitled to, i.e. in the form of interest rates, and because they were in financial distress, they had to go for a split mortgage. Their split mortgage, their repayments on the split mortgage was more than if they had their original tracker, which they always were entitled to. And because they were in a split mortgage, their loan was then sold to a Vulture fund. And what's happening now? They're paying 7.5%. They were screwed by permanent TSB. Their tracker was taken off them. They had to go into an arrangement. Because of the way permanent TSB structured those arrangements, they were deemed by non-performing, and therefore they were sold on. And these individuals did absolutely nothing wrong. And if the principle in relation to restoration is to be followed through, then these individuals should be back with permanent TSB and paying a rate that is significantly lower than what the Vultures are paying. As I said, we've worked with the Parliamentary Budget Office to cost this measure. It's a measure that would provide 30% relief on the increased interest costs relative to June last year, and capped at a relief of €1,500 per qualified household. It would exclude second and holiday homes. It would exclude rental properties held by landlords, and indeed your party leader talked about how he gets these letters all the time. But landlords, as we know, can get 100% tax relief. Your government, Fine Gael, actually increased it from 80% to 100%. So it excludes landlords. And it's a shock absorber for those households that face difficulties in the month ahead. It's targeted. It's absorbing a portion of increased interest costs. It's affordable, it's sensible, it's necessary. Following our work with the Parliamentary Budget Office, we estimate that the proposal would cost between 350 and 400 million. Why is there a range? Because none of us can be absolutely 100% sure where interest rates are going. But, for example, the higher end of that range is that fixed rates would increase by 1.5% compared to June of last year. Standard variable rates would increase across the board for every single policy by 3%. We know that that's not anywhere near where it's happening. So we have built in fluctuations in our potential significant increases for the remainder of this year. This is a measure that would last for the next 12 months. It is one that is sensible. It is one that is targeted. It is one that is time limited. Crucially, it is one that gives that support to individuals at this point in time. I mentioned about Rachel earlier on. The Minister just ignored that point in trying to deflect in terms of silly numbers that everybody was getting to get 1,500. But let's bring it back to the individual. This is a carer with a child with cerebral palsy whose interest rates have increased by €400 per month. And that's before actually this month's measure increase has been passed on to her. And she then faces the March increase. These individuals are looking for government to support them at this point in time. They're looking for government to do the right thing. We put it to government last year, saying, consider bringing forward a proposal. Consider it. And see if government come forward with a proposal and say, well, we think it should be capped at 1,300. Then that's grand. Let's discuss that. Or say that maybe the measure shouldn't kick in until the interest rate was above 3%. Then let's do that. But what we've done in Sinn Féin, through work that doesn't happen overnight, that's been going on for months with the Parliamentary Budget Office, and they have got their information from the Central Bank in relation to performing loans, non-performing loans, and I could give you, for example, The cost, if fixed rates increased by 1.5%, it would be 36.5 million. For non-performing in the 5 banks, it would be 400.45 million. For standard variable rates, if it went up 3%, it would be 136.4 million. If tracker rates at 3.5%, it would be 175 million for the performing loans and 7.81. The Budget Office has done that. But if you want to have a silly debate about the costings of this year or question their independence or assumptions, that's fine. But actually, I would like to talk about Rachel. I would like to talk about other people who have come to me and said that they are mortgage prisoners. They are saying to us, how am I going to pay a mortgage of 7.5% and 8%? Where am I supposed to get the money, they're saying to me in emails, of the 4,500 to 5,000 extra euro that I have to pay this year compared to last year? Now, I know that we as a government, if I were a Minister for Finance, I wouldn't be able to take that weight completely from them. We can't. We're not suggesting that the state absorb that entire increase. But we are recognising that the primary factor that is driving inflation in Europe is the war in Ukraine. And there has been measures introduced that have offset some of the worst impacts of inflation, and rightly so. And this is another issue. So those families need to be supported, they need to be protected. So for the next 12 months, 30% of the increased mortgage that has been paid by customers from a reference rate of June of last year, with no mortgage holder benefiting more than €1,500, is a sensible proposal. As I said, the range here is from 350 to €400 million. But indeed, if standard variable rates, because the banks shouldn't be passing on all of these increases, and they haven't in fairness to them, but if they didn't if they didn't pass on 3%, it wouldn't be anywhere near these figures. It would be less again. The point is here, let's be focused and centred, and I know the chairperson will agree with this because he's made these points on many, many occasions. We need to be centred on those who are struggling in terms of mortgage arrears. What I have not heard from government is anything. No solution, no plan, no nothing. Talking about the central bank and the solutions are improving regulation doesn't cut it. These Vulture funds, and I'll finish on this here, and I know you would like me to finish, but the Vulture funds do not offer fixed rates. They do not offer switching. They do not offer, in many circumstances, alternative arrangements. The only thing the Code of Conduct and mortgage arrears needs to do is to make sure that they go through the suite of measures that they offer. If they don't offer it, you're in dire straits. That's why the government need to stand in. I commend the motion to the House, and I'll be pressing the motion.
Now, that concludes the debate, and I now must put the question, and the question on the amendment comes first. Is the amendment agreed? Agreed. The amendment is agreed. So we now proceed. Oh, it's not agreed. Oh, I thought you. There was silence was assent. Anyway, the amendment is not agreed. So, Anish is an ceist. The Hiachta or Heave on question on the amendment. Aberdeen's Tá in a Kenya. Neil. Is the vote all? Vote all. The amendment is if the amendment is decided, this is the instructions. Without a division, claimed you should put. Otherwise, we have to proceed to the motion. Wait a second now. This is complicated now. Let's not do it. The division is right. Oh yes. So the division on the amendment is deferred until the next voting block, which is in a week's time.